Are we ready to roll, folks? Come on in. Come on in. Let's have the show of all shows. Let's have the show that we deserve. The show that makes everything worth it. The show that gets up in the morning, gets us up in the morning and ready to roll. Let's do it. Come on in. Give me a cheer on whether you can hear me. And then we will begin. We will begin, folks. Miss Ridhima Agrawal says, good morning. Good morning, Miss Agrawal. Can you hear me? Am I audible? Should we begin? Should we begin? If you can hear me. Yes, perfect. So that clears it. Thank you so much. Let's have the show that we deserve. The show that we deserve. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We are working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! But before we go, gotta follow tradition, right? You know the tradition. You know the sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does, without fail, every day. And all you need for the simultaneous sip is a cup or mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like some hot water with black pepper in it. And here we go. Let's do it again. Sublime. It's healing. You know what the simultaneous sip says, right? You know what it says? It says that you are not alone. It says that we are in this together. And that's such a beautiful thing to say. With that out of the way, let's begin. So there's a lot of good news coming in from all directions as far as the Indian economy is considered. We've talked a lot about this previously, about how this particular festive season was very important for the Indian economy. And it has proved to be. All the moves that the government has been doing for a year and a half now, they have been very nervously looking at what they yield, and the yield is nice. It's been culminating. It's culminating into a very good, active, and let's say green, robust festive season. From all corners of the industry, you're seeing some activity which is pointing to good news. Whether it be gold purchases, despite the high volumes, despite the high value, gold has been breaking all records. The volumes are nice. The volumes are nice, right? Uh, Auto sector is booming, of course, from entry level cars to mid level to SUVs and to premium segment cars. All are kicking in. Bikes, 350 plus have come out of the GST benefit scheme. Basically, bikes below 350 have been given a GST push, right? Less GST, but 350 not so much. So bikes are looking at making under 350cc bikes, which can really kill it in the market. Of course, 350 plus is luxury, 40% GST, still equally hard to sell as before. However, every bike company is now looking at launching new models below 350, and the bike sales are up, right? Bike, scooty scale sales are up. Restaurants. So restaurants also have a pretty green good news coming in. 20 so these this the restaurant segment was very lackadaisical. It had been for a very long time. For the last year or so, restaurants were not really kicking it, right? That has changed because of perhaps GST and the second order effects of it. So a lot of listed companies are reporting that the footfalls have uh, sort of improved by leaps and bounds. Can't see any positive movement in Barbecue Nation stock as of now. Let me check. Barbecue Nation stock. Yeah, it's not doing well, right? But uh, hospitality in general is doing well. The hotel chains, they are reporting good numbers, right? What else? There's hotel chains, there's restaurants, there's cars, there's bikes, there's gold. What else? FMCG companies are looking at great numbers, right? They're looking at numbers coming in from all directions and they're all positive. Banking is doing very well. By the way, HDFC and ICICI's quarterly results came out and they were green. Uh, Net profit up 11%, HDFC, robust trading. ICICI Bank Q2 net rises 5.2% up. Income climbs, net advances rise, margin right tailwind, depository pricing, all sorts of good news that we predicted, you know, for the banking, they are coming true. PSBs did well, private sectors also doing well, HDFC, ICICI doing well, Kotak yet to come out with their numbers, but other than that, it's cool. So banking is cool, real estate housing is cool, right? What is not cool? Of course, there are some problems with pharma. There are some problems with IT sector, right? Which exist, but those IT sector problems have also been offset by GCCs. So you're looking at a lot of action from all directions, which is leading to some deal action as well, right? A lot of companies are also looking at heightened private capex, right? We talked about 5,500 crores as a capex by JSW, which was non-energy. So whenever we're talking about capex, we're excited about the non-energy part of it because energy part of it has limited ramifications for the rest of the market. Uh, when I talk about, let's say, employment opportunities and so on and so on. So the country was really banking on a very active uh, festive season, and this is why the whole GST rationalization was timed, before Navratris, 22nd September, that's when Navratri hit. So all they wanted to do was make sure that all of these things pan out, and they are panning out. So that's good planning, I can say. Personal tax rationalization also helped. And then, of course, it's not just that, some ancillary moves like banning online gaming also had some positive effects, right? Because if gaming, online betting, let's call it, not gaming, but online betting, if it has like 1 lakh crore as dead money, right? It leads to blocking of capital for other productive industries, which can have a better multiplication factor. So we've talked about that. Nothing new for old viewers of Thinkers Frequency, but everything that we've been talking about, it's panning out as yet. Well, we've also been talking about an economy crash kind of a situation that people are talking about. Majorly, it's because gold is rising like never before. right? And gold dipped a bit yesterday, 3%, but then it sort of picked up again. So gold is not showing any signs of weakness, which leads to some nervousness about the fiat economy, the formal economy. US China trade war still pretty much on, right? US talking about going back on tariffs even before they've come into play, but that's very weird. Crude is dropping, by the way. Crude is dropping. Lower crude is good news for India because we are an energy importing country. We'll spend like incredible amounts of money on the import of crude, right? How much do we spend on crude import, folks? Do you remember how much we spend on crude imports? Uh, what was the number, right? So I'll just remember and connect your dots, right? So we spend a lot on shipbuilding. I remember that number. It was north of $70 billion. Every year we spend $70 billion on ships, right? Foreign ships, which is not cool, which is why India is looking at its own shipbuilding now. How much do we spend on crude imports? That's a very, very important number. We've talked about this. We've talked about this, and you should know, and we should all have this number. So uh, how much do we spend on crudes? I guess it was somewhere around 120, 140 billion. So let me just check 1 second. 132 billion. So we crude oil, we spent $132 billion in imports. So if crude drops, right? If crude drops, this import bill sort of gets easy. If it gets easy, the GDP doesn't get dragged down because GDP, imports are not good for GDP. So that's what's going on. But for the global economy, a falling crude could be a problem, right? Could be a problem because a lot of people depend on it. However, to fix the crude pricing, crude was supposed to go down. You know why crude was supposed to go down? We talked about how crude might just be looking at going down because Saudi Arabia had sort of exper enhanced, accelerated its crude production. Some comments. Good morning, Nishant, says Mr. Sharma. Good morning, Mr. Sharma. Mr. Sharma says, quick question. Although unprecedented that gold and stocks both are rising, what are the chances that there will not be any crash and they'll both be stable and rise? Now that's a beautiful question, Mr. Sharma. What are the chances that there is no crash? There is no, uh, it just stays stable. That's what Mr. Sharma asks. Now, it's very hard to put that number, but let's say that it's way above 30%, right? So when it comes to probabilities of a crash, we don't look at the number. How probable is the crash is not really a fair question. Because even if a crash has like a 5% chance or a 10% chance, and that 10% chance leads to a 1929 kind of an outcome or a 1987 kind of an outcome or a 1999 kind of an outcome or a 2008 kind of an outcome, it becomes a very difficult situation to handle, right? So we're not concerned about the probabilities as such, but let's say, why would the market not crash? Okay, the market won't crash if US is being able to manage its debt. The debt ceiling doesn't really bother anybody. There are no defaults, right? In any place. Markets won't crash if something wrong doesn't happen to the AI economy. So what happens is right now, if you take out data centers, if you take out AI, US markets have not grown like 0.1%, right? So if anything happens to these two industries, like this one industry, AI, right? If anything wrong happens to the AI play, everything, uh, why, how markets crash essentially. The mechanics of this is, let's say if somebody has a lot of stocks of Nvidia, okay, and those stocks have been bought on a leverage, okay. Now somehow those stocks crash, okay. So the person essentially loses his money, and then he also loses the leverage money, right? Now he can't pay, okay. Now he can't pay a lot of people. if those people also start now those people also start losing money because of him, because he was supposed to pay them and they're not able to pay back, so they have to sell their holdings, okay, some of the other holdings. Now because they have to sell their holdings, more holdings get sold and more things start falling like a domino, right? Because just one person couldn't take out the money he wanted at the time when he wanted it out. So that's the mechanics of a crash. Now nothing will crash if AI somehow keeps giving good news, if US doesn't default on the debt, if China doesn't screw with the US in a way that it hurts even one of its industries. All you need for a crash to happen is just one guy who needs to take some money out, big money, right? If we take some big money out, things goes down, a lot of people start losing money, they start taking money out, and then everything just crashes, bottoms out, right? So what's the probability of that not happening? Almost 50%, right? Who knows? According to Ray Dalio, sir, the market should have crashed already. They didn't, right? So a lot of people, if you look at Robert Kiyosaki, the good dad, sorry, I said good dad, poor dad. Well, that wasn't the name of his book. It was Rich Dad, Poor Dad. And no, Rich Dad, Poor Dad does not mean good dad, poor dad. Although, although equating a rich dad with a good dad is pretty funny, right? It's pretty funny. But anyway, the writer of Rich Dad Poor Dad, Robert Kiyosaki, he's been talking about a crash from 2022, right? Peter Schiff, Robert Kiyosaki, even Ray Dalio, a lot of Michael Burry, sir. You know about Michael Burry? If you watch The Big Short, the movie, the Christian Bale character is Michael Burry. Now he's a legend. He's a hero. He's a personal hero of mine, right? So anybody who wants to watch something good, please watch Michael Burry's speech he gave to a university, some sort of a graduation speech. So he's a legend, right? He said sell. He wrote one tweet saying sell back 2 years ago, I guess. 1.5, 2 years ago, right? Now he's one person who writes a tweet, then deletes his account, then comes back, talks about some metal music, right? And then goes away, talks about some metal music, goes away. So he was asking for recommendations on some metal songs, and I gave him Dark Tranquility, and he said thank you. And that was like my fan moment. But the point is that he said sell 2 years ago, 1.5, 2 years ago. Nothing happened. Nothing happened, right? So even if people are saying that, oh, people are buying gold, that's a hedge against the economy. If so many people are buying gold, there must be something radically wrong with the economy. Well, might be true, right? Who knows? Of course, there should be something wrong with the economy. But what if the economy just basically manages to balance it out? What do you do then, right? So there is no certainty of where the market goes. But yes, US is pretty fragile right now. And do you know about Madam Gopinath? So there is somebody called Geeta Gopinath. She's probably IMF chief right now. Okay, so she Indian origin, everybody becomes happy. So she is IMF chief, and she wrote a very big article saying that exposure to US tech stocks could lead to a financial crash, because those stocks themselves hold majority of value of the US economy, and if they crash, everything crashes. So you should deleverage away from those crashes. Some comments. Mr. Karthik Menon asks, hello sir, good morning. How do you think, all Kamla fans, Rich Dad, well said. How do you think that banks did well with frozen or interest rate cut or flattening of markets? Can this all be aligned to GST rationalization? Sir, Karthik Menon sir is a very nice person. He's very appreciative on LinkedIn. Thank you, sir. Sir, we talked about banks. So this is an ongoing story. We just talked about it. We had talked about banks having a problem with net interest margins for many quarters. So when we started doing Thinkers Frequency some 145 days ago, we talked about how banks might just be in a limbo, and that will correct in Q3, Q4, this particular Q, you know, July, September, July, August, September, and October, November, December. They've been able to do well because this has been a long time coming operation, right? So the answer to that has already been said, unfortunately. But yeah, we expected things to happen, right? Ratings and all. So, uh, and I hope that answer is sorted. But yeah, so what we were talking about was, uh, I lost my train of thought. What were we talking about, folks? We said something about the US economy. So yeah, Madam Geeta Gopinath, what she said was that the overexposure to US tech stocks could be very fragile because these are the stocks that are holding all the value of the US markets. These are the stocks which have been leading to most of the growth, basically all of the growth of US markets. And if something wrong happens with these stocks, just these 10 or 15 companies, the entire thing could be very, very bad, right? So that was her thesis. But people have been talking about this for a long time. And right, of course, when we talk about fragility of the system, we should address how tech is now becoming a circular economy because nobody is making money except for the few companies like Nvidia and so on and so forth, right? From AI at least. So Nvidia practically makes all the money from AI. And now what it's come to is it's basically investing in the software companies so that they could buy their GPUs, right? So AI is not making money. But the good news is that the big tech companies, right? They make money from all directions. So Google makes money, Microsoft makes money, Apple makes, so all of these companies make a lot of money. And even if they lose a lot of money on AI, their earnings shouldn't slow down. That's the hope. That's the hope. Now, Mr. Abhishek Sharma's question, what's the probability that nothing crashes? That probability of everything staying stable stays intact, stays pretty high or reasonably high because big tech companies have so much of cash coming in from all directions, right? So even if AI is supposed to hurt Facebook, supposed to hurt Meta, it hasn't hurt it yet, right? The earnings are pretty solid. Even if AI is supposed to hurt Google search, right? It hasn't hurt it yet. Google's stocks are pretty nice, earnings are pretty nice. Even if AI is supposed to hurt Microsoft, right? If you talk about Elon Musk, sir, making macro hard, right? He's talking about killing Microsoft. Everything that Microsoft does, but better, right? You'll have AI-led Microsoft killer. That's macro hard. He even named it macro hard. So even if macro hard is supposed to hurt Microsoft, it hasn't hurt it yet. There's so much of earnings that are coming in for Microsoft, and so on and so on and so on. Right? The only people losing money are like OpenAI and Perplexity and these kind of people. But who cares about that, right? Even if they lose money like $20 billion, Microsoft has a lot of money, and that sort of keeps things stable. But there might just be a time, when people say that, hey, you invested so much of money in AI and nothing happened, right? It was supposed to, it wasn't supposed to keep the earnings stable. It was supposed to like 10x, 20x the earnings, right? What happened there? Now, if something like that happens, right, everything gets screwed. Everything gets screwed, right? Then, so the probability is anybody's guess right now. But regardless of probability, Mr. Sharma, what Nassim Taleb sir says, right? Now, Nassim Taleb sir is somebody I quote a lot because his books, Anti-Fragile, Skin in the Game, Black Swan, Fooled by Randomness, these are the foremost books in modern philosophy. So if you talk about modern philosophy, especially in the context of markets, finance, and so on and so forth, uh, like that's the best. That's the best work, right? It's Nassim Taleb is right there. In some years, you might just see Black Swan and all of these things quoted right uh, at the level of Adam Smith or Karl Marx, let's say. That's the height of the philosophical prowess that has been displayed by Nassim Taleb sir in this book. So his thesis is that you cannot predict when the crash happens, and you should not predict future in a way which sort of times the market crashes and so on. But you should position yourself in a way where you benefit if the crash happens. So that's his body of work. He says, be anti fragile. What is fragile? Fragile is something that breaks, right? A box, you drop it, it breaks, right? What is robust? A box, you drop it, it doesn't break, it's robust. But what is anti fragile? A box you drop and it becomes better, right? That is anti fragile. So he says you need to be anti fragile, and the only way to be anti fragile is to position yourself in a way where even if a crash happens tomorrow, you only get better. So how would you get better, right? If tomorrow, let's say, a crash happens, how would you be positioned better? It's if, let's say, you had gold, a lot of gold, or if you were short on the market a little, you had some money parked when you were short on the market, right? So if market crashes tomorrow, your short yields a lot of money. But even if it doesn't, your short shouldn't be too much of your entire net worth, so that if the market keeps going on and you're paying 10 to 1 carry and you just lose all of your money because of the short, right? So to position yourself in a way that you gain even if the market crashes is what Black Swan is all about, is what anti-fragile is all about, it's what everything is all about. So if you remember, we've talked about this views of thinkers frequency. No, we've talked about how Mr. Nikhil Kamath and Nitin Kamath, they could bootstrap Zerodha, right? So a lot of people are like, Zerodha is bootstrapped and so on and so forth. Now, how could they bootstrap Zerodha? They were short on the market in 2008, 2007, 8. They were short on the market. So just imagine how their short must have yielded, right? It must have been extraordinary, right? How their short yielded. I mean, you can't even imagine. People who shorted 2008 are easily the most like affluent people now, richest people now, because that market crashed like a bucket. It dropped like a bucket, right? So even if it's very less, it's a small probability. The idea is to hedge yourself against that probability. There's a comment from Mr. Karthik Menon. You're a gem. Can't get to attend this more often. Must plan my day to begin with this amazing effort you are putting and insights. Thank you so much, sir. Thank you. So I hope you liked that brief. That was very important, right? That's very important because a lot of people think that they're doing very well because the markets are going well, right? So they're looking at their holdings and they're crazy and they're like, whoa, I'm making a lot of money. But market is making money, right? And then suddenly market crashes 23%, 30%. And all their money is in the market, stuck in the market. And then they're very sad because all the paper gains that they made, the paper burned, right? So that's the play. But with that out of the way, I hope that helped. Mr. Abhishek Sharma writes, but right now gold itself is rising. So it can also be possible if market crashes, gold also crashes. So will it still be good to use gold to hedge? No, that's the beauty of it. When the market crashes, gold doesn't crash. Mr. Abhishek Sharma. Gold doesn't crash. And just imagine. So when the market crashes, the market is equities, market is bonds, money market, call it. Okay? That crashes. Now, when it's going down, right, people are selling stocks. Okay? Now, people are selling stocks. Then, if the market is crashing and people also start looking at currencies, people also start selling treasuries, right? The dollars, right? The currency also crashes. Okay? So, it's not just that the stocks crash or debt crashes or the currency also starts crashing. So what are the people going to buy, right, to preserve their wealth? Because then the money also becomes paper, right? Hyperinflation edges in. It's like Zimbabwe, East Germany, and so on and so forth, right? Weimar Republic. It's basically you have to, like Argentina, you have to have like bricks of cash to buy bread, right? That also happens. So when currency starts falling off the cliff, what's the only thing that works? The only thing that works is gold. So money goes out of other places, even from currency, and currency starts getting packed in gold, and that's why gold doesn't crash when the markets don't crash. Markets crash. I hope that was useful, right? So we talked about that enough. Let's move on from the story. Uh, Defense. Speaking of defense, every inch of Pakistan within BrahMos range. Uh, Mr. Somukh asks, how insulated is India and Indian investors against this US-led AI bubble? So India is pretty insulated according to a lot of people. India's economy is being very, very robust and solid, and India has been doing very well. As the domestic economy, right? Domestic consumption, private capex, two pillars of the Indian economy that we've been talking about for a very long time. They have been very solid. But you know what happens is there is globalization, and because of that globalization, you don't know how things are attached, right? So are, a lot of economies are related in a way. Let's say if US economy crashes, and if US economy fails to take some material which Indians were selling, or if US economy crashes and IT basically goes out of business, all of a sudden the $280 billion industry already in a very, very bad shape, right? They sort of can't renew deals anymore, right? Or they renew deals at a 50% lower cost, and they have to fire a lot of people. So a lot of things are very, very related. That's called second order effects, right? These are very hard to imagine, and that's what we train ourselves to do every day at Thinkers Frequency. What do we do at Thinkers Frequency every day? We try to imagine the second order effects of things, right? And those things just blow up in ways that you can't see. Second order effects. People who are new today, there are a lot of viewers today. Some 9 people on YouTube, 6 people on LinkedIn. Ah, come on, man. 15 people yet again. But anyway, so second order effects is, let's say Corona happened, the tourism to Bali went down, or Indonesia went down, and suddenly there are gang wars happening amongst monkeys because tourism led to food which people used to throw to monkeys. No tourism, no people, no food for monkeys. Monkeys fighting against each other. That's called second order effects. Now, if you can predict that, you're very solid, right? Because you know what's going to happen, and you'd be very, very smart about everything because you know the second order. That's what we train ourselves to do every day. We've been doing this for 146 days, but we can't do it because it's very hard. Things just blow out in all proportions, and there's a lot of unknown unknowns, right? We've talked about known. So there's a metric, there's a 2 by 2 matrix that we draw. It's called a known unknown matrix. Okay, so here you have known, here you have unknown. I should have had a whiteboard, but anyway, so this matrix, known. These are things you know, and things you understand, things you are aware of, things you understand. Known. This is the most comfortable range, right? Whatever we know, we are safe with, because we know unless we commit a mistake, but we are safe. Known. Then comes known unknown. These are things we know, but we don't understand. Okay, things we know but don't understand. Known unknown. This is also not a problem because we know these things, we are aware of these things. It's just that we don't understand them, so we can read them, and we'll understand. So it's no problem at all. There's something called unknown known. Things we are not aware of but unknowingly understand, right? Let's say a child drives a motorcycle, child rides a bicycle. He doesn't know the mechanics of it, but he knows he can ride a bicycle. These things are slightly complicated because if something wrong happens, you don't know how to fix it, right? But unknown known. And then there's the last part, which is like unknown. Things you don't know that you don't know. Now those things are very, very crazy, right? You don't know what you don't know. I mean, there is something that I'm not even aware of, or I don't even understand, and it hits me, and I get screwed by a truck, right? So those things are hard to predict, which makes the philosophy of Nassim Taleb sir very important, right? That you don't try to figure out everything. What you try to do is keep yourself in a position where you gain, no matter what's the outcome. So that was a very long spiel, but it's a good thing because it's a very slow day for news. But Indian economy is doing solid, good stuff. It's going on. So moving on, the answer was to the Mr. Sumukh's question, which said, how insulated is India? It is insulated, but you don't know what you don't know. Moving on. US trade talks progressing in a cordial manner, says Mr. Piyush Goyal. Well, thank you. Yeah, so we were talking about every inch of Pakistan within BrahMos range. Uh, India's defense, of course, BrahMos got inaugurated. The UP plant, Lucknow plant, starting making BrahMos missiles. BrahMos is a missile which India made with Russia. So it's an indigenous missile now. A lot of tech transfer happened. These two people made it together. And India's range is pretty solid, it says. So every good news in defense, this is just posturing. This is no good news. This is okay. But every news in defense is a good news for India because defense signals solid manufacturing prowess and vertically integrated manufacturing progress. So why is, let's say, defense manufacturing more important than automotive manufacturing? Because when you're manufacturing defense products, you cannot be outsourcing critical parts to the east or west, right? So what happens with automotive is that if they're making automotive, they're importing motors or they're importing a lot of critical components from China, right? And that doesn't happen in automotive. I'm just giving an example. Let's make toys, right? So if you're assembling toys, if you're assembling smartphones, let's say, a lot of components are coming from China, CKD, and so on and so forth, right? Now, defense, you can't do that because defense, you've got to make everything on your own. And if you're making everything on your own, you develop intelligence, you develop technology prowess, you develop software prowess, you develop a lot of prowess which you otherwise wouldn't have. So that is like real Atmanirbharta, which happens if the country invests in defense. I'm very keen on what happens in February when they announce the budget. I hope they raise the defense expenditure as a percentage of GDP from 1.9 to, let's say, 2.24 or 2.2 to 2.4. Right now, India's defense spend per GDP is 1.9%. China's is 2.5%. Pakistan is even higher. But Pakistan doesn't matter because the GDP is small. But the point is, global average is around 2.5. We need 2.5. If we need 2.5, all the defense stocks will be green. But that's not why I'm talking about it. I'm talking about because, it'll be very, very good for the country. Moving on. US trade talks happening. What beverage are you using today, folks? This is Diwali. Happy Diwali. Happy Choti Diwali to all of you. I hope everything goes well. Right? Let's move on. IndusInd has come out with its earning, 437 crore loss in Q2, higher microfinance provisioning. IndusInd is that notorious bank, Hinduja family, forex struggles. Mr. Ashutosh Bhandekar says hot water with ginger and black pepper. So nice. Mr. Padzala writes, you talked about gold rising when market crashes. True. And I know that. All right. So we were talking about IndusInd, right? The whole thing. Lender to focus on domain areas like vehicle financing, MFI lending, says CEO. It's causing a lot of problems with the bank. It was essentially doing a lot of, rigma role with finance for forex. We've discussed it, so we won't repeat ourselves. But IndusInd is a dumpster fire truck. Anything that Hindujas touch, I won't touch again. Ever since I came to know that they was like smuggling people from India and making them work as domestic helps 18 hours a day. They confiscated their passports so they couldn't leave. I wouldn't touch anything. So Ashok Leland is a Hinduja company. They're a big conglomerate. IndusInd is, of course, one of the big brands of these people. Right? IndusInd, Punjab PNB September quarter net jumps 14%. IDFC net rises 7.75%. So all private banks, public sector banks, small SFBs, no, not much, but private sector PSBs all clicking in. Exactly how we told you, folks. This quarter was not that great. The real good news will be the next quarter. So, how is looking into the future working out? I'd say it's looking out very well, right? Very well. So that's cool. Speaking of cool, Emirates NBD, the second largest UAE bank, it's buying RBL. Ratnakar Bank it used to be. It's now RBL. 60% for $3 billion. Then there are going to be open market transactions where it's going to buy more. But then there's this norm where it cannot buy more than 74% of a bank, right? The regulation stays. You can a foreign entity can own 74% up till 74%. So it's going to stop at 74%. But biggest FDI in banking, right? You know the other case of FDI in banking, right? Can you give me a quick cheer, folks? The other case in banking, right? What's the other FDI case in banking? We've talked about this. You know about this. So give me a quick cheer. The other FDI in banking. Yes, bank, says Mr. Patil. You're right, of course. We had a good discussion on Yes Bank. Yes Bank, says Mr. Abhishek Sharma. Mr. CPS John and Mr. Praveen God. You're all right. 100% correct. Even though that's not this big a deal. This is like $3 billion, 60%. It's awesome. That was $1.4 billion. But for 10%, I guess. If I'm not wrong. But they're going to have open market transactions, so it's awesome. By the way, Keynes chip rollout hastens India's semiconductor goal. Electronic sales 20 to 25% higher this Navratri. Demand for India-made premium mobile phones rising. Electronics is kicking it. Keynes is coming out with its chip, right? Which is very, very good news. We missed the Keynes rally, right? Even though we've talked about semiconductor play so much. We've been literally talking about semiconductors and India semiconductor mission and whole the national spiel of doing so well. And we talked about how these stocks are gonna click. And I didn't know, right? I didn't know that we had a listed player in semiconductors. Right? This was a known unknown for me. I knew that the industry was gonna rise. I knew it's gonna go 10x in no time. I knew that it whoever invests directly or indirectly in this sector would really make a lot of money. Even then, we didn't invest in it. I mean, I didn't invest in it. And I'm looking at the stock and I'm like, shit, man. Shit. Holy shit, man. Just look at the stock. 1 year, it's 1,300% return. Right? 24% return just one year. And if you're looking at 5 years, it's 5,500% return. Right? It's just breaks my heart, man. I've been talking about this for a very long time. But anyway, Mr. Rally. But yeah, Keynes is coming out with its chip production. It's hastened its chip production, which is great, great news, right? OSAT facility in Gujarat, Sanand, began production last week, second to do so after CG Semi, Electronics Information Minister said. So this is obviously very, very good news for India, right? It's awesome. It's awesome. So moving on from this particular play, Reliance Retail gets an NCLT nod to acquire future supply chain from the bankruptcy proceedings. This is one of the most interesting corporate stories of all time, the acquisition of Future Retail. Viewers of Thinkers Frequency know why Future Retail's acquisition is the most interesting story, corporate story in a very, very long time, right? You know about this, folks, right? Viewers, you remember? Anybody who doesn't remember, I'll give you a brief. So Future Retail was supposed to get acquired by Reliance for $3.4 billion, right? And it was supposed to be Reliance played wonderfully there. No, Mr. Sharma. No. It's not. It wasn't Reliance who played wonderfully there. It was Amazon who played wonderfully there. Okay, so it's not a known thing here. I'll tell you what happened. So Reliance Future Retail was a debt-ridden play. It couldn't do it, right? So the debt was bringing it down. It was falling off the cliff. So there was nothing that Future Retail could do, right? Except to sell itself for whoever was buying. So there were not a lot of people who could actually buy Future Retail because it was a huge operation, right? And a retail operation, big operation. Maybe Trent could do it, maybe Aditya Birla could do it, but they didn't want it, right? So Reliance came along and it said it's gonna buy out Future Retail for $3.4 billion, right? That was good news. That was supposed to be a good news for Future Retail. But then what happened was that Future Retail subsidiary called Future Coupons Limited They had gotten some money from Amazon, some 2,100 crores. It's chicken shit when it comes to future retail scale, right? But they had taken some money from Amazon for Future Coupons Limited. And in that contract, the idiot lawyer of Future Retail, he let one clause go. In that clause, it was written that Amazon is going to be party to any transaction that future companies and related entities do, and it will have a say on whether those entities can raise or sell, uh, you know, themselves. So Amazon got a veto for the entire big future retail corporation, right? Uh, the M&A, just by 2,100 crores in a tiny future coupons limited operation. So the lawyer of future retail, the legal team, they must have been absolute morons, idiots who let that clause go, right? And because of that clause, Amazon said that you cannot sell to future retail. Oh, sorry, you cannot sell to Reliance. Now, because of that, the whole transaction got bogged down, right? The transaction got bogged down. Amazon kept its play, and then the debt repayment dates were coming. Okay, so debt repayment dates were coming, and if the debt repayment dates were crossed, right, future retail would be admitted to bankruptcy proceedings. If it would be admitted to bankruptcy proceedings, Reliance won't be able to pay $3.4 billion to future retail, even if it wanted, the lenders and everybody, right? So the court proceedings, spearheaded by Amazon, totally screwed future retail. Basis just to 2,100 crore, you know. Mr. Patil says we should find out who was appointed firm. Yeah, man, you got to. Whoever wrote that contract, whoever approved that contract on behalf of future retail, they should not be in the business of writing contracts. They should just faithfully retire, go hunt, forage, in the forests. They don't deserve to live in the legal fraternity. It's just impossible. Impossibly dumb, right? How they brought down a $4 billion empire, much bigger empire in the heyday, because of one bad contractual term. They just screwed everything. And you got to give it to Amazon's lawyers as well, right? You also, at the same time, you'll have to check who Amazon's lawyers were, who basically killed competition, man. They just finished somebody. So anyway, Reliance is now buying future supply chain, 170 crore to acquire bankrupt company. Well, it's very sad. Future retail, whatever happened to future retail? Very sad. Very sad, folks. Anyway, what Amazon gained after this, says Mr. Tushar Tiwari. Well, Amazon gained the market, right? Future retail was competition, a very solid competition. Retail, you know, it gained markets, of course. That's what it gained. Anyway, moving on, folks. Promoters of Z are looking at hiking their stake. Z is in trouble, right? The linear TV is dying. Z is majorly TV. Its OTT connected TV playing thing hasn't really clicked as yet. But the promoters, the Z is India's Succession story. So people who watch Succession, it's an HBO show based on the life of Mr. Rupert Murdoch, the founder of Fox. So Fox is America's Z News, right? The right-wing media outlet. Even though the ecosystem in the US media play is very different, right? There's just one Fox, then everybody else is left, CNN, MSNBC, ABC, so on and so forth. So all of those networks are left. Fox is the big conservative group. It's not the same in India. India is a very different market, but Z in many ways is India's own succession story. Z was supposed to merge with Sony, form a $10 billion group. That failed because the promoters didn't want to go out of the business, right? The deal had said that Z will need to hire external CEOs, management. Promoters cannot continue, said the Japanese Sony people, right? Z said yes sir, yes sir, yes sir, yes sir, yes sir, and then didn't sign it, right? And Sony also didn't play along. It said no, we're not touching it. Sorry, whatever losses that we had to make because of this deal, we'll take it. We'll not let the merged entity run by Goenkas. So now Z is Goenkars are left with Z. They still control Z, and they're looking at buying more stakes and hiking their stake. The Z's stock, by the way, fell by a lot, right? So very interesting to see what happens to Z. Moving on. Geostar sees early signs of ad recovery after GST rate changes. Geo connected TV, Geo channels and all the broadcasting play, they are finding out that there's good money in the play. Moving on. There's some deep dives that have been done by Economic Times today. Wear art on the sleeve. They're talking about some sort of gold, lead costumes where it's sort of a jewelry kind of a play where, I don't understand any of this, man. Sorry. But there are some companies, Mr. Aman Podar, he's an artist. I loved it when I read about him. He says, I'm an artist and I make these things. I don't have a collection. It's not a product that I'm saying. It's not jewelry. It's an art piece. It takes 200 hours to make that art piece go into some gown or something. I don't know, man, what happens in the fashion world. As you must have seen in these last 146 episodes, regular viewers, I'm not much of a fashion guy. Right? But yeah, jewelry, sculptural jewelry makes a splash as tailoring grills, hand harnesses, breastplates, and metal couture. A slew of designers and artists are creating bijouterie that goes beyond ornamentation, while young consumers who crave individuality are besotted by this jewelry that is sometimes unusual and sometimes uncomfortable. A lot of big words, not for me, but big words in general. Moving on. Then there's also a deep dive about how Babus are changing from IRS. IRS are rising. Earlier, IAS used to be the joint secretary play. IRS were just tax collectors. Now that's changing. I don't give a shit about Babus. Screw these guys. Inheritance of loss. LGBT hires of rich families are excluded from inheritance. So Indian conservative ultra rich families, the will and all, to be able to get that money, the family money. What they're saying is that LGBT guys, the hires, they must have a normal marriage, a sham marriage or something of that sort to get the money, and they're basically excluded. Moving on. Reliance played wonderfully in the sense that despite these issues, Reliance took effective control of 800 of Future Retail's prime location stores by citing non-payment of rent. Reliance has become landlord of many of these properties, says Mr. Abhishek Sharma. You're right. So essentially what Reliance ended up doing, and that was also the next step to do, Reliance just changed the boards of retail because that's what they could do. So that was brilliant, but that's basically an under the table deal that happened, right? It was the only logical thing that Reliance could have done, right? It became the landlord of these stores, which was amazing, but it was a logical consequence, right? Moving on. There's a lot of things happening. Car dealerships doing well. Moviegoers are back. But who's watching Indian movies? Like, moviegoers are back, that's good news. But are there any good movies that are on theaters recently? It says moviegoers are back. Zomato District, Big My Show. But what movies are there? Maybe there's some movies that. Let me check out the movies that exist on Bollywood right now. Movies near me or in theaters. There's Kantara. There is what The hell is happening? Let me go to Book My Show and check out the movies. There's Thamma. There's Kantara. There's Ek Diwane Ki Diwaniyat. There's Sunny Sanskari Ki Tulsi Kumari. There's Jolly LLB 3. There's Gode Gode Chhatu. There's it's maybe I'm not the right audience for this kind of material. But anyway, I shall not comment. Says Mr. Tushant. What the fuck is happening, man? What are these people making? It's just unbelievable, man. It's unbelievable. Kantara. I've heard good things about Kantara, but I can't watch it because I tried watching the first one. It's not my taste. But you know what? Now I'll have to quote. I'll have to use the F word so people below 18 can switch off. But this is not me saying. It's not my words. But this is Ram Gopal Verma sir saying, praising Kantara. Okay. So a lot of praise came to Kantara, and the director says, I'm just a cinema lover. I'm just happy, you know, and so on and so forth. So Mr. Ram Gopal Verma came out and said, you're not just a cinema lover, you are a cinema fucker. Because you fucked cinema. It's so great that cinema will never be the same. It's just unbelievable. So no, you're not just a regular cinema lover, you're a cinema fucker. And I'm like, what? What kind of a compliment is that? Like, why would you? And he wrote this on a tweet. And like, why would you say something like that, sir? I mean, I get the praise, but you know, what? What? Like, what kind of a compliment is that, man? Clearly, English is not his first language. But speaking of movies, folks, Daniel Day-Lewis, sir, is coming back to movies. So, do you know about Daniel Day-Lewis? He's said to be the greatest living actor. He's like a true artist kind of a way, right? Method actor to the T. He's like Daniel Day-Lewis. He does like movies every 5 or 6 years, and then he just doesn't want to be an actor, so he doesn't engage in promotions and stuff. He's like very he lives in obscure setting. He became a cobbler. He literally became a cobbler after retiring from movies. So he has long talked about retirement, and he started fixing shoes, man. That's the kind of guy he is. So he does like very few movies, and it's said that he was retired already. So the last movie he did was Phantom Thread by Paul Thomas Anderson. It talked about a dress designer who falls in love with a waitress, and then a relationship with the artist. That was the movie. Paul Thomas Anderson, I don't like him at all, but that was a movie, right? That was his last movie that came out in 2017, and since then no movie. It's been like 8 years, no movies since then. But he's coming back. His son has written a movie, and that is coming out. So he's come out of retirement for his son. So if you follow Daniel Day-Lewis, filmography, there are a lot of movies, good movies that have been in the play, and one of those movies is, which my favorite is, In the Name of the Father. Now, In the Name of the Father is a brilliant film. It's based on a true story. It's about a guy who gets falsely persecuted and then gets jailed for a very, very long time, right? And then he comes out after a long, long judicial process. So that movie was pretty incredible, In the Name of the Father, right? Then he's also starred in Lincoln, Steven Spielberg movie, which was a pretty solid movie. So he's one guy, he stays the character on the set also. So let's say if he's Lincoln, you can't call him like Daniel Day-Lewis on the set. You'll call him President Lincoln, right? So that's the kind of person he is. Then there was There Will Be Blood, again by Paul Thomas Anderson. I hated that movie. Didn't like it at all. Then there was Gangs of New York by Martin Scorsese, sir. It's one of my less favorite Martin Scorsese films. I didn't like that movie much, but it had its moments, right? So that's Mr. Daniel Day-Lewis. He's coming out with a new movie. So, gotta watch it. Gotta watch it because you can't miss a Daniel Day-Lewis movie as a film buff, right? Even if you don't like it, even if it's not to your calling, You have to watch it to appreciate the work somebody puts in. Like if somebody's coming out with like one movie in 10 years, right? Appreciation for the craft, which is amazing, which is pretty awesome. Daniel De Lewis, right? In the Name of the Father was my favorite movie, man. It was pretty awesome. Then there was My Left Foot, which is okay. My Left Foot, Phantom Thread, Lincoln. So he's won 3 Oscars. So he's the highest, greatest Oscar actor, like 3 Oscars for leading man. That's amazing. That's amazing, right? So that's coming to movies. Coming back to the whole play of automotive, there's a lot of inventions that are going on. Now, automotive sector, the car sector, the bike sector, it's talking about inventing around software. So earlier software was a small part of the system, but now software has taken over the automotive industry, right? So there's a meme, there's an actual event where Trump was meeting Elon Musk, sir, and he was, right, basically promoting Teslas, right? So he said when he entered the car, he was like, it's all a computer. It's all computer, right? That the car was all computer. That's what he said. So it's all computer. That's car making in nutshell now. Aether came out with its whole pothole mapping thing, right? It became viral that they had trained all the vehicle data. They took that data and trained it, and they could find out potholes in Bangalore, right? Alert people riding Aether scooties. Ultraviolet has like radar play. Nobody knows why, but they have radars, and a lot of things are basically moving on towards computers, more and more integration of computers, especially with EVs, right? That's basically software play. And with that, we come to the end of the 146th episode of Thinkers Frequency, folks. As soon as I started talking about films and art, right, people started dropping off. We had like 12 people consistently on YouTube. And then when I started talking about Daniel Day Lewis, right, people started dropping off as if it's not important, right? I'll tell you my perspective on this whole, right, personality play. A lot of people think that focus is being focused. Let's say if somebody's talking about business and finance, you hear because that's of interest to you. But if somebody starts talking about movies, you turn off. That is not, in my view, a pretty good strategy, because human beings were not supposed to be unidimensional robots, right, with focus on a particular area of things. That was not how human beings were designed to be. If you read a lot of philosophy and if you read a lot of autobiographies, right, we were always multidimensional beings. We were always polymaths by design, right? We like Leonardo da Vinci. If you look at Leonardo da Vinci, he was artist, he was a painter, he was also an inventor, an engineer, an archaeologist, a theater designer, and so on and so forth. So he did a lot of things. Benjamin Franklin, right? He invented the swivel chair, right? While also being a political figure. George Washington, of course. So we've heard a lot of these people. They were experts at a lot of fields. They read across the board. They heard stuff across the board. They learnt across the board. And that's what made them special. They were not focused on just one area of life, right? Because that makes people boring. Now you'll ask, now why do we people talk about focus with that aspect so much? Because of Model T, right? Because when industrialization happened, right, the industrial revolution happened, the factory came into the play. And with factory, the idea of specialization came into the play. Earlier, the guy used to do everything, right? But now it was like, you have to be at this part of the factory. You have to be at this part of the factory. Somebody who's doing, let's say, doors will only do doors. Somebody who's doing wheels will only do wheels. So then you became more and more just focused towards your thing, right? So even if you were making burgers, somebody was just cooking patties, right? Just cooking patties, right? Somebody was just putting pickles in it because McDonald's happened, right? So when Ford came out with its own, Model T production, which basically mass produced things, it led people to different roles in an assembly line, which basically made them so narrow, right? Then the guy who's paints just doing paints, right? And that sort of became a thing that, and then even in burgers, in everything, right? The people stopped being multi-dimensional beings and they just became robots in one area, right? And that's what I do. And that made them boring. Oh, that's all. It made them uninteresting. It made them right, a pain to be with. Like, what can you talk to a person, let's say, who's just a software engineer, who doesn't know anything apart from software engineering. He has no taste of life. He has no interests. He's just a boring guy who makes money day in and day out, goes home and sleeps, right? You don't want to be with that guy. It's just boring. Somebody who's in finance or venture capital, the guy can't talk about anything else. He's a bore, right? He has no taste for life, for living. He has no taste of arts. He has no personality, right? He's just this boring investment banker or a venture capitalist. Why would you be like that? Why would you be such a bore, right? So even if you look at the good people of today, like Mr. Musk, right? He's not just one person. He's not just doing one thing. He's doing a lot of things, right? Good people. Paul Allen, sir, who I admire so much, right? Co-founder of Microsoft. He was not just a software guy, right? He used to play music. He was a guitar player. Then he used to invest in movies. He used to love movies. He used to love arts. He bought sports teams, many of them. He fixed home building and so on. So people, interesting people, always have varied interests in life and things, right? If you can be interested about different things, if you can know and do different things, that's what makes you interesting. Otherwise, if you're just a boring piece of shit, right? That's just my opinion. Throughout human history, nowhere have we uh, focused on uh, restricting human intellect and creativity into just one field and called it focused. This is just like past 80 years or so. Before that, we were pretty, broad and varied, right? And now with AI, what's going to happen is that people who are broad and varied, they will gain more in times to come, because specialization will be out of fashion, right? Because what specialization, you used to be a software, now software, all software is done by a machine, right? So what are you going to do? Oh, you used to do this, all of it is done by machine. What are you going to do? So somebody who can think in different things, right, connect things, like Leonardo da Vinci sir said, realize that everything connects to everything else, right? So even if though he was just a painter, he could do everything because he could connect the idea of looking to everything. So great biography of Leonardo da Vinci. So that's what made him interesting, and that's what's going to be the future of human beings as well, right? It's going to look like a lot in the past where people used to do different things. There were no boring investment bankers or venture capitalists, tasteless people with no interest outside their work, no passions whatsoever. Just like if you talk to them, you could make a better conversation with a brick or a wall, right? That's not cool, but glad. So some comments. Uh, Mr. Tushar Tiwari says, I love that actually this stuff makes this show different from the regular TV news. Yeah, because we need to be varied, right? We need to. I completely agree with you, says Mr. Sumant Kumar. Oh, well, thank you. We like minded people, right? This is what it is. I sincerely believe that we should not restrict ourselves. But otherwise, how would we judge second order effects, right? If this is all we know, if there's just one thing we know, how would we understand its implications on other things and how things relate, right? We won't be able to do. But that brings us to the end of the thinkers of Nikki Lauda, James Hunt, says Mr. Abhishek Sharma, right? Oh, you're talking, you've given a philosophical point. Uh, anyway, so this brings us to the end of 146th episode of Thinkers Frequency, our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis right before we punch in. We should punch in 9:19, even though it's a festivity. Choti Diwali, happy Diwali to all of you. But I'm sure you have good things to do. So I wish you all a beautiful day, personally and professionally. And I'll see you tomorrow, same place, same time, hopefully. I need to thank Miss Ridhima Agrawal, Mr. Abhishek Sharma, Mr. Sumukh, Mr. Ashutosh Bhandekar, Mr. Parth Zala, Mr. Chirag Patil, Mr. Praveen Gaud, Mr. Tushar Tiwari, Mr. And yeah, thank you so much. Have a great day, everyone, says Mr. Sharma. Have a beautiful day, you all. Happy Diwali. I hope it brings all happiness and wealth and health, everything to you. I wish you everything good this world has to offer and then some more. Please try and help this grow, this effort, right? Thinkers Frequency. It'll need to grow to be sustainable. So I hope it grows. Do whatever you can, WhatsApp status, LinkedIn post, whatever. Mr. Abhishek Sharma says, will we have tomorrow's session given Diwali will be there? Yeah, I think we will do that in the morning, right? Diwali is majorly celebrated later in the day. So I'll try. I'll do it. I think I'll do it. So yeah, with that we come to the end. Take care, folks. It was lovely talking. Bye bye.